Welcome viewers and welcome to the forexprogram.com YouTube channel. I'm your host, Valentine, and I am introducing you to a new YouTube series on the FPF YouTube channel. We're going to talk about trading tips and how you can improve your trading yourself. I'm going to touch a little bit on my story, how I got introduced to trading, how my journey is going, and after that I'm going to start with risk management. In my opinion, one of the most important things in trading. Okay, so I personally started trading at the end of 2019. I was introduced by a friend, and then I was in something like a mentorship, I would say. And from there on, I definitely lost money in the beginning and I did a lot of things wrong in my early journey. And I was thinking about quitting very often. And to be honest, I'm glad I stayed in the business, stayed in the game. And yeah, since then, I had my struggles. And I remember once I lost around five or almost six figures from my personal savings in one trade during a couple of minutes, trading US 30. And after that, I was feeling like quitting. So I was thinking about quitting trading, leaving it completely alone. But I stayed. And after that, I was introduced to some new traders. And when I first started trading, I was thinking about getting rich in like 1 or 2 years. And back then, I told my girlfriend that we will be rich in a couple of years. And that was definitely the wrong approach. And I did a lot of things wrong because I was like thinking about doing 10% per trade. And what I really didn't know back then, what I really didn't have was a good risk management back then. I just traded, I just over leveraged. I did so many things wrong. And to be honest, you guys are really lucky to get some people that are going to show you the way and they are talking about their experience as I am going to do it now. And please take a notebook, take notes, and really learn out of my mistakes and out of the mistakes that other people did. Because, in my opinion, if someone back then told me what I know now, I definitely would have been nearer to my goals and definitely a lot faster without losing so much money on the way. So, yeah, my opinion, risk management is one of the most important things during trading because at the end of the day, the risk is the only thing we really can control because the outcome at the end of the day is random, okay? Every outcome of every trade is random. What we can control is the risk that we are using per trade. So I made the mistake often. I just over leveraged. I used like 5 or 6% risk, which is just stupid. And I recommend you guys stick to one system. Be clear and be intentional about what you're going to risk and stay and stick to that. Because as I just said, it is so important to have a risk management in place because that stops you from over trading it stops you from getting into a big drawdown, and it's just so important. And what I'm going to show you today is how to calculate your risk. I'm going to show you how to place a stop loss for the beginners that are new to the channel. And I know most of you guys know how to place a stop loss, but I just want to start at the beginning and then we are going to go from there. Then we are going into advanced topics as well. But today the topic is risk management. And as I said, you need to be intentional and think about how much you're going to risk, okay? And first, I'm going to show you the side. This right here is my FX book lot size calculator. So you guys can type in my FX book Forex calculator. And if you trade Forex, you can type in the pair you're trading right here. For me, it would be just euro, but as you can see, here is everything, GBP, random pairs as well. US dollar, here's gold as well. So first, type in the pair that you're using. For me, it's euro USD. Put in the currency that you're using. For me, it's US dollar. Type in your account size. That would be $100,000 for me, or the demo account that I'm showing you today. Typed in, and after that, that's really important. Type in the risk you're going to use, okay? So most of the times use 1%, but I'm going to go over that in a couple minutes as well. If you type in 1, then it's going to calculate it based on you risking 1% from the account, which equals $1,000. Let's go to euro. I'm going to show it to you on TradingView. So as I said, let's think about the $100,000 account, and let's say I'm going to risk 1%. Okay, I'm trading euro USD, and I'm going to show you right here. Okay, let's go into TradingView. Let's say we're going to trade euro and we are using the 50-minute time frame. Let's say you have an invalidation point, which for me would personally be below that low, but we're going to cover that in a different topic. Okay, let's say we are going for 2-to-1 risk to reward. And now, if I say this right here is minus 1% for me, then this one here is going to be the -1. I'm going to set my stop loss to 1.08390. Okay, and when price is going to trade down there from the current level it is trading, I'm going to lose 1% of my account, which is going to equal $1,000. Okay, so now the important part. If you don't use a stop loss, price is going to trade through, and if it's going to come lower and you're using, like, if the leverage is higher than 1%, you're going to lose your account altogether if you're in a challenge with FPF, let's say. Okay, so the important thing to notice here is, or the important takeaway is, to never ever trade without a stop loss. Trust me, I did it, and I lost a couple of challenges that way, and I lost a couple of live accounts as well, because I just over leveraged and then I blew my account in the matter of seconds. Okay, so please never ever do that. Do it like me, or do it like I'm going to show you here, and calculate your risk properly. So I just showed you on TradingView to use the tool. Now we are going to go back into our position size calculator. I'm going to use 1% risk. Let's say stop loss is 18 pips. Then we're going to have a look, and then it's going to show you $1,000 is the risk that we are using, and we can use 5.56 lots. Okay, so you need to remember that. Now I am going to go back into TradingView, and let's say entry at 1072, top loss is 1.08390. Okay, the lot size we are using is 5.56 lots on a $100,000 account. Okay, I'm going to go into demo account now, and I'm going to show you how we are going to use. Now you can see my demo account here, and on the phone it's a little bit different than on the desktop. I'm just going to show it on my MacBook, but on MetaTrader 5 you can log into your account, and then you can put in the volume. As we calculated the risk, the volume for this trade would be 5.56. Then we're going to click on buy because we want to buy it, and we can click on trade. So, and as you can see here, we got 5.56. I'm going to put in the stop loss, which was 108,390. And now we're going to click on that. As you can see now, we have a stop loss, which is the red line, which is what I showed you on the trading view, which is just below that low here, okay? And if price is going to trade down there, it's going to put myself out in a loss, obviously, but it's minus 1%, which is important to notice. Now we can put a take profit in as well. And if we're going to go back to trading view, let's say we use the 1 to 2 risk to reward, which would equal around 36 pip take profit. I'm going to go for the big figure, which would be, to check, let's do 109. And let's go back to the MetaTrader. I can put in 10900 and then my stop is here. Okay, so now we're going to touch on another topic, which is setting your trade into break even. Now we're back in trading view. Now let's say that is completely up to what trading strategy you're using, but I would suggest you guys to put your trade into, to put the stop loss to break even once the trade is in profit. Okay, let's imagine price is going to trade up from here and above that high. For me personally, when price trades above this high, I'm going to put the stop loss that I just had down here up to the entry. What happens by that is when price is going to turn from here and it reverses and it comes back, it's now risk-free. So I can go to sleep or do different things, but it's important to protect your trade. And it is definitely up to you. You can go to break even when you achieve a like 1-to-1 risk to reward or 1 to 1.5. I know a couple different strategies, but for me personally, when a swing high on the lower time frame is breached and it's in direction of order flow, I most of the times set my trade to break even to reduce the risk, okay? Because then I don't have open risk anymore. When price is going to come back, I'm going to be out at break even. I'm not going to lose anything by that. It's funny to see because I just placed a random trade and price is going up, and just funny to see. But now I'm going to share the biggest takeaways from that with you. These are the most important bullet points in my opinion. So let's go over the 101 in risk management. So when you start out, think about how much you're willing to lose. Let's say for me personally, it's 1%. I always stick to 1% risk and I'm leaving it, okay? Let's say that you're just starting out and you're only fine with losing 0.5% risk. It's totally fine as well, it's up to you. Some people could tolerate up to 2% risk. I'm definitely not a person, because when I'm in drawdown, I'm just getting my mind playing tricks on me. And that is the reason for my 1% risk, okay? But if it's a little bit different for you guys, it's totally fine, okay? It's definitely depending on the strategy and on the personality. So once you got an amount that fits you personally, stick to that, okay? I'm going to do a weekly outlook and I'm laying out when I'm going to risk and how much I'm going to risk. That is so important, because I sometimes had the problems that I was seeing a trade and it was like, and I was so sure that price is going to run to my take profit that I over leveraged. I used 2 or 3% risk, but at the end of the day, I just got slapped, okay? That was the reason for me to lay out the foundation when I'm going to risk and what I am going to risk. As I said, for me, it's 1%. And I'm laying out, let's say I'm going to risk 1% during New York session on Wednesday. If New York session comes around and I'm going to put on a trade if there is an opportunity presenting to myself, I'm going to use 1% risk, not more, not less. Okay, that is what I mean with sticking to that one thing that you laid out. And think about how you're going to act once you are in drawdown. Do you use the same risk? Do you decrease the risk? I personally decreased the risk after three losing trades in a row to 0.5% risk. The reason for that is because every one of us is going to get on a losing streak. That is normal, and it's the cost of doing business in trading. So losses are normal, and a losing streak is going to happen to every one of us. For that reason, I got something in place, and I'm going to reduce my risk after 3 losers. So when I'm down 3%, let's say I'm going to reduce the risk to 0.5 until I'm up at break even. If I lose a fourth time in a row, I'm going to decrease the risk to 0.25%. By doing that, I just can't blow an account, and I can't blow a challenge account hitting the daily drawdown limit or hitting the overall drawdown limit as well, because I need to do so much stop loss hits in a row that it's just, for my system, it's definitely not going to happen when I stick to the risk management. Okay, and let's say you have a strike rate of 50%. When you stick to your risk, you're never ever going to blow the account. If you're going to over leverage and do other dumb and stupid stuff, you're definitely going to lose a challenge account. That is the reason why I emphasize this so much. After that, you're going to lay out all the things mentioned above in your trading plan and stick to them. Okay, lay them out and stick to them. If necessary, print them out, put them in your office, and just stick to them. Okay, it's very important. After that, you're going to calculate the risk before you enter a trade. That's the most important thing. I'm calculating the risk before I enter a trade, and it doesn't matter if it's the same pair and like if it's the same stop loss size as I was using yesterday. I'm going to calculate the risk once again every time before I put on a trade. You need to take your time with that and don't make any mistake, okay? Because that is very important. And don't try to just guess it, okay? Because most of the times you're doing a mistake. And I myself did all of the, okay? That's the reason why I could talk about it, because I did all of the mistakes I mentioned. So please calculate your risk before entering a trade and be very intentional about that. Very important point. Find out in which market profiles your system works the best and find out during which times your system is not performing well. I touched on that during an interview, okay? My system is not performing well on Mondays. So what did I do? I'm not going to trade Mondays. Let's say you're going to find out that you're not a good London trader. What are you going to do? Eliminate London session. So it's very easy, because you need to make sure to see, and let's say if you're using a journal, to really see where you're accelerating and where you're not so good and in which market conditions. I myself, I am not a good trader during consolidations. Look at dollar the last week. I didn't take any single trade because I'm not good trading consolidations. And I know that. And after the years, you're going to know when you're performing well and when you don't. And during times when dollar, let's say, is trending, like last year of August, when price was just going up and up and up, there are the times where you could increase the risk, or just, let's say, stick to 1% for me personally, but you can increase your trade frequency. During times where you're not performing well, like myself in consolidations, I'm decreasing my frequency and I'm decreasing the risk that I'm using. That is a very important point, okay? Think about that. If I'm trading consolidations because my plan is showing a trade during New York session, let's say, I'm going to use 0.5% risk, and I lay that out the week prior to that, because I am playing probabilities during trading. You need to make sure to know when you're accelerating and when your system is not performing well. Okay? So when you stick to your risk management, you can't blow an account at all. That's what I talked about prior to that, because if you think about it that way, if you decrease your risk when you're in drawdown, you really won't blow an account, because your account needs to have 15 or 20 stop loss hits if you do it with a system like me, to where you're decreasing the risk after 3 losers and decreasing the risk even further, because for 5% risk you need 4 losing trades in a row to lose -1%. Okay? Is it possible for any of you to blow an account doing that? I don't think so. I don't really think so. And that is the reason why you need to stick to the basics, stick to the risk management, stick to the risk that you decreased when you're in drawdown. Then you're all good. You're completely good to go. And if you think about the risk and the amount that you're using, let the capital do the heavy lifting. There is no need for increased risk, because at the end of the day, you don't need higher risk, you need more capital, because you're going to make more money with let's say 0.5% risk on a $1 or $2 million account. You can't do a $1,000 account and risk 10%, because that's gambling. We're not going to do that. We're taking calculated bets in trading, okay? So the reason for that is to just gain more capital, do more prop firm challenges, and acquire more capital altogether. Because at the end of the day, if you're going to do, let's just say you're going to do 2% per week, is that more than enough on a $2 million account? In my opinion, it definitely is. And it definitely is going to pay my personal bills. I don't know about you. Okay? So, last point I'm going to touch on is to be careful when using a trade copier and taking more than one trade on different accounts, because your risk definitely adds up. Let's say you're buying euro, as I did earlier, and you're using 2 different accounts and you're using 1% risk on each account. That adds up to 2% altogether. You need to think about that when you have more challenges. You need to split up the risk on different accounts, because if you're not going to do that, the risk is too high. Let's say you have 3 or 4 accounts and you're using 1% risk on each account. That would add up to 4% risk in total. Are you willing to bet on euro dollar going higher on 4 different accounts with 4%? I definitely won't do that. Okay? I have different accounts for different things, for swing trading, for intraday trading, but I'm not going to use the same leverage that I would use on one account. I'm going to split it up. Let's say if I use 2 accounts, I'm going to split up the risk in 0.5 and 0.5%. By doing that, I have a risk of 1% altogether, but I'm not going to over leverage. Okay? So that were the biggest keys, in my opinion, for risk management today. You can give me some recommendations on what I could talk about in the future, but I'm definitely going to do a series about that, and I'm going to help you create a trading plan. I'm going to help you with steps to really identify high probability weeks and how to do that yourself. But that's enough for today. Make sure to subscribe to the forexpropfirm.com YouTube channel, leave a comment down below, give a thumbs up, and stay tuned for the upcoming episodes. Until next time, happy trading.